The Directorate General of Foreign Trade rejected 80% of Container Corporation's claims for export incentives. Soumya Sarkar joins us with the impact on the stock, and the reason we put this in first word is because there is likely, this news is very big from a Concor perspective, isn't it, Sumit?
Well, yeah, it is a big impact because if you see, Citi has cited that the post-tax impact on the EPS would be close to 10.2 rupees. That is nearly 50% of what the company had than EPS in FY19. So what has happened that in an exchange filing, the company said that DGFT, that is Directorate General of Foreign Trade, has disallowed claims worth nearly 861 crore rupees out of the total 1044 crore rupees claimed of the company that it had recognized. Now, it has stated that the services provided by Container Corp towards custom transit of sealed containers by railway transport are not eligible under SEIS benefit. So firstly, let's understand what is this SEIS benefit. Now, SEIS was introduced in 2015 as part of the new foreign trade policy. Now, under this scheme, the government incentivizes exporters, which includes all types of service providers who are located in India, irrespective of the nature of their organization, with nearly 3 to 5% of the benefits of the total amount of services they provide. Now, Container Corp till date had booked an SEIS benefit of close to 1044 crore rupees for FY16 to FY19, out of which 82%, that is 861 crore rupees, has been disallowed. Now, the company will be contesting this decision of DGFT. That is what the company said in its release. Now, SEIS income, if you see an overall basis, before this DGFT clarification came in, accounted for nearly 21% of Container Corp's profit over FY16 to FY19. Now, if you remember, in FY19 audit report, the independent auditors of this Container Corp had also had raised concern about this in their key audit matters. Now, Container Corp's management had recognized this as income receivable under the scheme, but the claims filed by the company had so far not been approved by the concerned department. Now, and because of this, the auditor had raised concern regarding the fair value of the amount receivable, as the same was factored in the balance sheet as a recognized income, but no amount had been realized so far at the end of financial year 2019. Now, according to Citi Research, this disallowance amount may have to be written off as an exceptional item for Container Corp and may have an impact of close to 10.2 rupees per share on a post-tax basis. To put this in perspective, for FY19, the company had an EPS of nearly 20.1 rupees, while for FY20, the company is expected to do an EPS of close to 21 rupees. Now, this is according to Bloomberg consensus estimate. So, nearly this 10.2 rupees impact is nearly 50% of the EPS that the company can do. But however, this is an exceptional loss that the company might have to book, and there won't be any cash loss so far because the company had not received this amount. So, no cash loss, but an impact on profit might definitely come in. However, the brokerage believes that this impact is manageable for Container Corp due to its market leadership and the potential benefit due to DFC commissioning over the next 2 years. Also, Morgan Stanley in its note downgraded its rating on the stock to equal weight from an overweight rating, citing the recent outperformance in the stock price and the disallowance of this SEIS claim. Now, it reduced its earnings per share for FY20 to FY22 by 12 to 14% to factor in this disallowance of SEIS income, and some part of this was also marginally offset by the lower corporate tax rate that was recently announced by the finance minister.
Okay, Sumit, did I hear you say that the impact might be 50% of the FY19 EPS? And
FY20 also. FY20, the Bloomberg consensus estimate for EPS is close to 21 rupees. And Citi is saying that on a post-tax basis, the EPS impact would be close to 10.2 rupees. That is nearly 50% of the EPS. However, this would be an exceptional loss though, not an operational loss and not a cash loss for the company.
Nevertheless, we will probably see an impact on the stock today for sure. Sumit, thanks so much for putting that into perspective.